Marty, I appreciate you being on the show. We're here in Utah. It's 2022. We've gone through the COVID pandemic and still dealing with some of the variants. We've seen supply chain being affected. We've seen the pictures of ships backed up at the docks. People worried about interest rates going up. People are worried about, inflation. And you probably get this question a lot, but how's the real estate market? Is this a good time to be in the real estate?
We do get that question a lot. That's probably the most common question we get. And the best way I can think of to answer that question is with a question, and that is, it depends. Are you a buyer or a seller or an investor?
Okay, so let's take a buyer, for example.
Okay.
So I hear people say, well, prices are going up. I'd love to buy a house in Utah, but it's just getting so expensive. Is this a good time to be a buyer in Utah? Should they buy in Utah?
That is a good question, and again, it depends, but in general, the answer is yes. If you are buying for the long term, real estate has never decreased in value over the long run. So it does make sense to buy, especially before it goes up more. If you're more of a short-term buyer, then also it depends. The short-term outlook is really positive for buyers. In real estate, short-term really does mean short-term. We're talking 6 to 18 months is really all we can see into the financial future.
Yeah.
So if you're thinking of buying for shorter term than that, yeah, that's kind of more risky. But 6 to 18 months out, maybe 2 to 3 years out, it still looks really positive. So it depends on what your purpose is.
People remember 2008. And so what's different now in the market versus the housing bubble in 2008? Because, I think people are worried that they're going to buy a house and the prices are going to drop.
Yeah, that's a great question. So in 2008, the biggest difference is the aggressive subprime lending practices that were in place then that are not in place now. Basically, people were getting loans to buy houses that normally wouldn't be eligible for those funds, and so people were buying homes more than the market could bear. So anytime that demand increases without the supply increasing, you have a natural upward push on prices. And when you've got that upward push on prices because of an increase in demand, and then the demand disappears, then the prices have a natural decrease. And that's exactly what happened when they tightened up those lending practices that were around in 2006, 2007, 2008. Then that demand disappeared and the supply stayed the same, so prices fell back down to where they should have been.
So what's driving the prices in Utah right now?
Great. So what's driving the prices in Utah right now is something very, very different. So lending practices are still much more conservative than they were even back in 2005, 2006. But now what's driving the prices is increase in supply. Now what's driving the prices is an increase in demand without an increase in supply. So supply is increasing, but nowhere near as fast as demand is. What I mean by that is we have a net positive migration into Utah and other parts of the nation. And when you have a net positive migration, the demand goes up and the supply can't catch up, so prices go up.
So if you're listening to this and you live in a different state, it could be different state to state. This may not be the same scenario in neighboring states, for example.
That's right. In fact, Utah had the number 2 fastest increasing housing market in the nation, right behind Idaho.
So what's causing the migration to Utah?
So there's a number of factors. In Utah, there's actually 2 main factors that are driving demand. One of them is the net in-migration, and what's causing that for the most part is business practices in Utah. And you might think, well, what does that have to do with the housing market? Well, if you look at what economists are calling the Great Tax Migration, you'll see a lot of large employers. We have Tyson Chicken, Amazon is a big one that just came here, Facebook, all these large companies, including tech companies, relocating their business operations from more from less business-friendly areas like California, New York, and those coastal areas, then they bring with them a lot of need for workers to build out the infrastructure, the buildings, and then the workers generally stay, and then come the employees to fill the buildings, and they generally stay, of course. So you have that net in migration from all these businesses coming to relocate to a more business-friendly region. But the second factor in Utah that's unique is that our families tend to be larger in Utah, and so the population grows organically faster here than it does in many other states. So those two aspects combined come together to increase the demand.
So we've got a natural upward pressure on prices. It's not being propped up by the lending practices that were going on in '08.
That's exactly right. That's the major difference between '08 and what's going on right now.
All right. So the summary then, is this a good market for the buyer? How's the real estate market? What would you say?
It's a very good market to buy in as a buyer, even though we've heard that how difficult it is to buy as a buyer because of, multiple offers and all that. If you have a solid agent representing you that can help you navigate the multiple offers and be strategic about your offer, and you can buy into this current market as it's increasing, it's a fantastic time to buy.
Now, you said something that I thought was interesting, that sometimes if you're trying to time the market, you can miss the market altogether. Because I think a lot of times we hear, buy low and sell high. So I want to wait till the prices are crashing and then buy houses for cheap. But why would that be maybe a dangerous strategy for a buyer?
That's a great question. So it is a good strategy to buy low and sell high. It's just, how do you do that? Yeah. So in the stock market, there are programs and algorithms for day traders that they use to do that kind of thing. In the real estate market, it's a little different. If you're going, you have to either buy as it's increasing or sit around and wait until the market turns and it starts to decrease. And generally, it just doesn't. Now, there are fluctuations in the market all the time. You mentioned '08, and generally about every 10 years, there's some kind of market fluctuation, which means that we're a little overdue for one. But if you're going to wait for that market to soften, you're going to most likely miss it. If you just add up the chances, your chances are that you're going to miss that fluctuation.
Now, you talked about there could be a risk of getting priced out of the market if you wait, because as prices go up, maybe it's harder for you to get in, especially if you're a first-time home buyer and getting into an entry-level home. What about on the flip side, if the market shifts and things are going down, is there a risk to trying to buy in that climate? Are lenders still lending money at that time? Is it easy to get loans?
That's a great question. So there's risk whether you buy in an increasing or a decreasing market. It's just the factors of the risk are different. One of the risk factors buying in a decreasing market is if you're buying for short-term purposes, 1, 2, 3, 4 years, then your risk is higher because if the market doesn't bottom out and or hit the trough rather and start to climb back up before you need to sell, then you may be selling at a loss.
Right.
So there is that risk of buying in a short term or in a declining market. If you're more for the long run, 5, 10 plus years, in most cases, in almost every case, then you're going to be just fine even buying in a decreasing market.
Okay, great. So let's talk about investors now. So if I'm someone who wants to pick up a rental property and get into the real estate investing game, is this a good time to invest? Prices are going up. Is this a good time to invest in real estate?
It's a great question. So that's a multifaceted situation. Buyers who are investing are going to get a return on their investment in two ways. One is on a cash flow basis. They buy a property and hold it and rent it out. And rents have not caught up with rising prices. So right now, rents are not giving you as much of a capitalization rate as they would in a more stable or more normalized market. However, the investors are making that up on the backside with appreciation. So as homes are appreciating quickly, most investors are willing to accept a lower cap rate or lower capitalization rate in favor of an increasing or an appreciating asset.
So you say rents are not appreciating as fast as the value of the homes. are not going up as fast right now. But does that tend to catch up?
It does. It almost always catches up. One of the reasons rents aren't increasing as much as home prices are is because generally you've got a 12-month lease, and so that price is locked in for that period.
Okay. So when the market turns down, rents tend to go up.
They can. So sometimes when the market goes down, you do see at least a slight increase in foreclosures or other types of forfeitures. And when that happens, people that were qualified on mortgages now are not qualified for a mortgage, and they will look to a rental property. And so the demand in rentals, or the demand for a rental property, increases for somebody looking to rent it.
So it sounds like real estate, I mean, any investment can have a risk, but it sounds like a pretty safe investment, because whether it's going up or down, you're still kind of protected.
Well, in most cases, yeah. I mean, everything needs to be looked at carefully, and we can help you do that, of course. But in most cases, you're going to be pretty good investing in real estate.
Yeah, cool. So let's take our third category, sellers.
Okay.
So, I mean, at first blush, it looks like, man, this is a great time to be a seller because prices are going up. I can make a lot of money if I sell my house. But what kind of advice do you give to somebody who's thinking about selling? What are some of the questions you ask or want them to think about?
So the first thing is exactly what you said. This is a great time to sell because you've probably got more equity than you think you have, and you will probably clear a little more than you thought you would. However, the bigger question is this a good time to sell? It depends on everybody's situation. The best answer I can give you is by, again, asking you a question. What's your motivation to sell? And if your motivation to sell is to cash in on the market, again, it's risky to time the market, but it might be smart to wait a little bit, to let it go up a little more. If you need to sell for some other reason, or simply want to sell to upsize or downsize or something like that, then yeah, it really is a good time to sell. It's a very safe time to sell.
So would it make sense to downsize in a market like this, that when things are going up, or?
Well, again, it depends on your motivation.
Yeah.
If you want to cash in on the equity that you've gained and decrease or eliminate your mortgage by downsizing, it's a fantastic move. That's a great idea. Other people have different reasons for downsizing. Maybe they don't want to take care of as much property anymore, or maybe their house doesn't have as many people in as it did before. There's a couple other reasons to downsize, of course.
So on a return on investment, so to speak, if they were to upsize, now they've got more dollars appreciating. Is that going to be better for them in the long run?
That's a great question. It can be. Upsizing in real estate has two things that happen. One is you have more of your dollars obviously invested into that real estate investment, so more of your dollars are increasing as real estate increases. But an upsized property or a higher end property usually does not increase in value at quite the same rate as a lower end or more entry level house does.
Okay. And why is that? Is just more of a demand for? More of a demand. Just more first-time home buyers are getting in the market?
Absolutely. Yeah, that demand means everything.
All right. I feel like we've kind of breezed through this really quickly. What else do we want to hit?
So let's see, you asked me about lending practices. Is it easy to get a loan? And we didn't cover that yet.
Oh, yeah. Is it easy to get a loan in a down market?
It depends.
Or refinancing?
Well, either one. If you're looking to get a loan to purchase a place in a decreasing or a declining market, lenders tend to tighten their parameters. They usually want a larger down payment or more conservative debt to income ratios, things like that. But you usually can still get a loan in a declining market without any trouble. If you're looking to refinance, the same factors apply.
So what are some of the factors one should consider if they're thinking about refinancing? Is it just if the interest rate is different?
So great question. One is the interest rate. Another is what's your motivation to refinance? Are you looking for cash out? Are you looking to invest? Are you looking to just lower your payment? But one of the things that people often forget about in refinancing is the potential to dump your mortgage insurance payment. So if you can switch lending programs, because now you have more equity in your house, you can save hundreds of dollars, like $100 to $500 a month or more.
What do you mean by lending programs?
So, for example, if you bought your home 2 years ago using FHA financing or an FHA program, then you're likely paying somewhere between $100 and $500 a month in mortgage insurance. And if you have gained enough equity in your house, and in the last 2 years in Utah you probably have, you can possibly switch to a conventional loan by refinancing. You can dump that mortgage insurance and never have to pay it again, let alone what money you'll save each month by getting a better interest rate.
Now, what would you say about doing cash out? Is that what? I mean, everybody's different, but like, what would be some of the reasons why maybe it's a good idea to take some money out of a cash out refinance, or why would it be smart to not?
So one of the things that you mentioned earlier about a cash out refinance is you can take that asset and use it to invest in other real estate properties. Maybe you want to buy a rental.
Yeah. Okay. Is there a risk to taking that out? I mean,
sure there is.
What's the risk? Because
the risk is that the lender is going to lock in an interest rate on that. That's a cost of borrowing that money that is never going to change. That is guaranteed that you will pay at least that much money. Right now it's in the 3%.
Because that money you took out is part of your new mortgage.
That's correct.
Yeah.
When you do a cash out mortgage, of course, you're increasing your mortgage amount.
Right.
Yeah. So you owe more money. So you'll always have to pay at least 3% or so, depending on what the rate you get. But the idea is that what you buy with that money will increase in value faster than the rate you're paying the bank, and that is usually the case.
Okay. So if someone's thinking about doing this, who's the best first person to talk to? Should they talk to someone like you? Would they talk to the bank first to work out a strategy or find out the pros and cons? Who's the best person to talk to?
So I'm going to say a real estate agent, but I also want to throw in there a loan officer, of course. Bank can be a good place to start. My favorite place to start talking about financing when you're financing real estate is a mortgage broker, because they have access to many, many different loan programs at many different financial institutions. But I'm going to put in a plug for talking to a realtor, because they're going to look at your motivation for wanting to make that change with a more holistic point of view usually. They're going to ask you questions about what your goals are specifically, and making a finance move doesn't always make the most sense for reaching that goal. So maybe it's purchasing or selling a different property, and you can accomplish the same thing by doing that, or maybe getting an equity line of credit is the right move, and a loan officer isn't necessarily going to have those in mind.
Yeah. So what advice would you give to someone who's going, oh, it's our first home, it's the first time we've had this access to this equity, not really sure what I should do. Okay, I'm going to talk to a realtor. What kind of questions should they ask to find out if they're talking to the right realtor that's going to be able to give them good advice?
Well, that's a great question. So if the realtor does not ask them very many questions, I would be wary to begin with. If the realtor just says, oh, gee, you should sell, then maybe that's not the right agent to ask. Maybe the best situation is for them to sell, but the realtor needs to ask the consumer a lot of questions in order to really understand what their goals are and really understand the best approach. So it's going to be somebody that's going to ask them a lot of questions. Yeah,
and you brought up goals and motivation a lot, so I guess that's important to really get clear.
Absolutely.
Yeah, not just whatever, reacting to whatever things are going on in the economy.
That's right.
Yeah, okay. Well, good. Well, so then to summarize then, for our listeners, whether they're sellers, buyers, or investors, it sounds like this is a good time to be in real estate in Utah.
There's no question about that. That is definitely a good time to be in real estate in Utah, and it looks like it's going to be that way for a while.
Okay. All right. Well, Marty, thanks for your insights. If people want to have more questions, or they want to get more information, or they want to talk to you and be able to kind of give you their goals and kind of what their motivations are and see what you think they ought to do, what's the best way for them to get a hold of you?
Shoot me a text or give me a call, 801-948-0796, or send me an email, marty@utahhomesgroup.com.
Awesome. Marty, well, thanks for taking the time. This has been really valuable information, and hopefully those of you listening got something out of this, at least spark some questions that you might want to ask, and reach out to Marty and get those questions answered. Thanks again.
Thanks, Daryl.
Yep.